Oh man, so April CPI day is here. We are 10 minutes away from a critical CPI reading. How will markets respond? We've got Bitcoin actually holding up fairly well here at 27,700. We can't complain, right? If you look at this price action right here, you've got higher lows. Bitcoin's holding, albeit a very slight upwards trend here. Now, of course, we know that the problem here is that we've lost our higher highs and Bitcoin is sitting at this crucial pattern. Could CPI be the reading that either confirms whether we're going to bounce from this pivot point, which is this pivot point to the left, and start working our way to the upside, something like so, boom, or will the CPI come in negative and we work our way towards our price target of 25,000, which will, of course, be painful. A move down to 25,000 will create a lot of fear in the market. People will start getting really fearful again and selling off and panicking. And you know what crypto Twitter and YouTube is like. But we've also spoken about the fact that 25,000 and particularly 25.5, 26 isn't too bad of a pullback and will present a really good opportunity. So we're kind of stuck in this situation. Yes, you want Bitcoin to move, but one more dip down towards 25.5, 26,000 would be a really nice entry for me personally. Guys, if you want to support the channel and you're trading anyway, check out the links in the description to Bybit and Mexi, two of the trading platforms I personally use and currently offering you guys some awesome rewards. Links in the description. Let's get into the expectations, which are as follows. 5% is the reading we got on the headline year-over-year figure last time round. We are expecting that to come in at 5% again. So the market is expecting no decline here. They just want a sideways line here, moving to the right-hand side. They want 5% again. Okay? And we're going to get on to what this means for what the market has priced in as well. Then the market on the month-over-month figure is expecting 0.4% month-over-month. That's a huge climb from last month's figure, which was 0.1%. Okay, remember, markets were really buoyant. We dropped from 0.4 down to 0.1, but they're not expecting that. They're expecting to go back up to 0.4. That's a huge difference. When you annualize 0.4, that is 4.8% yearly inflation, which is why last month's reading was so powerful. 0.1% suggests 1.2% annualized inflation, which is really, really low. So the market is giving it the benefit of the doubt. They're pricing in a high number here. Let's also then look at the core inflation. And of course, now over the last few meetings, we've seen that core inflation is now higher than the headline inflation. So that came in at 5.6% last month. That's expected to come in at 5.5% in the next 7 minutes. Okay, so we will be looking out for that as well. Month-on-month core is less looked at, but we're going to look at it anyway. Expected at 0.4 versus the 0.385 we had last time round. So the challenge we now have is that the market is not pricing in much, right? So the market is almost saying, guys, we're not expecting crazy inflation to notch down this month, but here's the double-edged sword. If therefore it misses even those figures, which I've just shared with you, this market could really throw up. And that's the problem we have here. So not only do we have markets, particularly Bitcoin, sitting at a crucial level where it's trying to hold support. It's trying to hold support here. If not, it's going to have to visit 26,000 and then 25,000. If that reading comes in missed, if we get more than 5% year over year, if we get more than the 5.5 on the core inflation, this market could throw up. And that could create a little bit of a painful move to the downside. So I'm setting my biases to the downside to see if we do get any opportunities. If we do want to come back here and work our way to the upside, great. I'm not going to be chasing any green candles. I have nothing to do. I don't want to add to any positions if we start moving up towards 30,000. That's good. I want to see then, do we break 30 and do we break 31? Two very important resistances to the upside. If we do break 30 and more importantly 31 to create the higher high, then things get really exciting. But until that happens, there's no point getting excited. It's more likely that we should be looking for a pullback into our weekly EMA ribbon. Okay, so we've got 6 minutes before then. Let's see what you guys are saying here in the chat. Good morning to Lefty, Beyond Infinity, Digital D, Shoaib. Good to see so many familiar faces. Siobhan, good to see you as well. Brandon, Andrew, Mike. Shout out to all of you guys for joining these live streams. Really appreciate all of you guys and your support. Hopefully, I'm able to drop some alpha in here for you guys to navigate this CPI reading. Leica, good to see you as well. Debenus, good to see you. Everyone expects 25k, so it's either a short squeeze from here or 20.3k CMA gap. It's a very good point you make there, right? The markets are all about expectations. And suddenly, previously, everybody was just thinking, oh, Bitcoin's going up to 40,000, which is why we were a bit tentative, say, hang on a second, we need a pullback. And that's why I was shouting back then, weeks ago, get ready for 25k. And now you're close, right? 27k, fine. Everybody's expecting 40k. Now, everybody's expecting 25k as a dead certainty, which is why we now need to say, hang on a second, maybe some of those shorters are going to get short squoze, and this can start to move to the upside. Okay, so you need to sometimes think about what is the opposite of what everybody's expecting. Stu, good to see you as well. Ian, hope you're well, buddy. Good to see you. I stopped believing any of the official data by now, especially the jobs numbers. It's Soviet level BS. Honestly, I don't believe in this as well. Loads of people call it CP lie, but the reality is, just like the debt ceiling, which we spoke about, the markets move to this stuff. So as investors, we've got to monitor it. Whether we believe the data is right or not isn't the point. If this is the data they're showing us, and this is the data Jerome Powell's going to be using to make his decisions on interest rates, we've got to play that game. And that's going to happen until we decouple. And I think that time will come. That time will come when Bitcoin does decide to decouple, and we can move on our own merits because we're our own commodity, our own asset class, and off we go to the upside, right? But for now, we're being treated like a risk-on asset. There's this duality that goes on with Bitcoin where, you know, a lot of us watching here hold it as a long-term thesis, right? But there's a big percentage of people who trade Bitcoin as a risk-on asset, just like they would trade Tesla stock, just how they would trade any other high-risk stock, they trade it as risk-on. And when risk rotates off, they got nothing to do with Bitcoin. Because we're so adopted into Bitcoin, because we're part of the culture, we're in it, we can't imagine that. But there's so many people out there, stock people, other investors in other assets, commodities, for example, who just trade Bitcoin when things are fun, and then they get out. They couldn't care less about bear markets. They just leave it throughout that period. Okay, DCA for life, good to see you. Special K, Fripto, good to see you guys. Smash up the likes on the way in, guys. We will be covering the CPI release. I'm going to show you what happened last time round. The report comes in like this. We'll look at this figure. So this 0.1 is expected to go up to 0.4. Anything worse in there, markets could throw up. This figure here, which is your headline, the blue is your headline, is expected to just go sideways. We just want to cross here. Anything higher, no bueno, market will not be happy. For the maroon colored line here, you're expecting this to come in just slightly below at 5.5, just a little notch down here to 5.5. And that's what we're expecting. We will be looking out for that when that data comes out. Let's now get a refresh. We will be refreshing this within the next 3 minutes as that data comes out. I've got a really important set of videos for you guys. I've got a really important BRC20 video coming out later today. Make sure you guys go watch that. I actually give you my top 5 picks. It's a really nascent industry. It's hugely early, hugely risky, but this could be the next frontier. Now, if you've not watched my video from yesterday explaining why this could be a risk to Bitcoin, make sure you go watch that as well because it's quite controversial. But also today I will be sharing my picks. I then have another exciting video which I'm working on, a completely different format, which has taken a good couple of weeks to get this video ready, but it's going to be ready for you guys to watch very shortly. So make sure you look out for that video when it does come out. Make sure you hit up the likes, make sure you watch it and share it with friends. I really hope you guys enjoy that. Cool. All right. I think we're all set. Everybody happy with the expectations? Let me know in the comments if you're not sure what's going on here. In terms of the price action, let's get a quick check-in on the EMA ribbon, because the daily EMA ribbon is what we closed 2 days ago below, right? Which is not a good look. Now, the next candle, which was yesterday on the Tuesday, we weren't able to get straight back in. And now we're hovering around. So the risk now is we could be doing something like this, right? Working towards that 25k. We've lost our EMA ribbon and it could start acting like resistance. The best time to reclaim your EMA ribbon on any time frame is immediately after you've lost it. Right? As soon as you lose it, get straight back in, and it ends up just being a fake out, and you can hold your EMA ribbon. But once you spend a couple of days in this instance below your EMA ribbon, not so good, right? So we do not want to be losing this daily EMA ribbon, but you can already see, look at the top line starts flipping, right? That light yellow line is flipping over the slightly darker yellow line here, and that's getting the early stages of the flipping. Okay, on the weekly chart, a little bit less to worry about, right? We're very extended away from our EMA ribbon. It's flipping in the bullish sense with 3 degrees here into the flippening, with the yellow line crossing right across here into the red line. And this is a good sign. But we've got to remain at these levels. Even if we don't climb to 31 or 30, it's good. It's allowing time for this to flip. Okay, so without further ado, guys, let's just drop the Bitcoin chart down now into the 5-minute chart so we can start to see what craziness unfolds as I start to refresh the CPI. And I'm refreshing now to see, do we get it? That's March's figure still refreshing. It's gone past on my clock. Let me know in the comments if you guys get it before me. It's always a fun game to play, depending on who's got the faster internet. Right, refreshing, still showing Marches. There you go. April, 4.9. Good, lower than expected. Let's open up the PDF. The item for all food, less energy, increased 0.4. That was expected. And 5.5%. So expected on the core, expected on the month over month, and a slight beat on the 5% for the headline, right? 4.9 versus 5%. Let's see how markets are responding here. Let's drop this down to the 1 minute, and we're seeing Bitcoin move. Nice, nice, nice. Good move here on Bitcoin. Positive CPI data, trending in the right direction. Let the traders play their games, guys. Don't be surprised to see a little red candle come shortly after. They will be playing their trades, but longer term, it's good, right? 4.9% on the headline inflation versus the 5% expected. We got 0.4% month over month, which was exactly as expected. And we got the 5.5% on the core, which was exactly expected as well. So call it, a meet plus a single beat on the headline inflation, which is good. And now let's see how the markets digest this. But one thing is for sure, now we can start to make the argument of, can we have this pause? Can we now stop, right? We already know that 75% of the market is pricing in that by June the 14th, Jerome Powell has to stop hiking rates. And that's huge. We could be coming to the end of this rate hike cycle. Now, I understand there could be 6 months of us sitting at this rate hike, right? There could be 6 months of us sitting at 5% Fed funds rate. I understand that. But to stop our hiking, when at one point we were hiking 75 base points over and over and inflation was just not coming down, I mean, this is a good sign, right? We've got to take the positives from that and understand that, that's good news. So you can see here, guys, to look at the official report, 0.4% came in as expected on the month over month. This figure came in slightly better, right? So this was expected, the headline inflation was expected to come in at 5, which would have been exactly the same as the last reading. Let me just show you that there, which would have been exactly the same as that cross there, but it came in slightly under, which is good. This came in, which is the core, less food and energy, came in at as expected, okay? So good CPI data, good report. Now we look to the next meeting to see, can we get that pause? And that's why we got to keep monitoring this over the next few days. I'm going to refresh it right now as well to see what are the markets pricing in, right? Majority of the markets are expecting a pause, but you do have this 25% of the market, which is, not a shabby amount. It's a quarter of the market thinking we could get one more 25 basis points. Right, so we get another CPI reading, don't forget, guys, before this FOMC meeting. So there is one, I think it's the day before on the 13th. We get that CPI reading the day before. So Jerome Powell will be armed with this piece of data, the next month's CPI, then he makes a decision on June the 14th at the next FOMC meeting. So getting a nice move here on Bitcoin back through 28,000 for the first time in quite a while. And this is a good sign now. If we can hold this and if the trading momentum doesn't die out, this could be a good sign, right? If we can bounce from here and go attack these levels, great. But there's a lot of work to do. And I don't want everybody to get hugely excited just yet. Because 1, this is just trading volume. Let it settle down over the next hours or so. But 2, 30 is the resistance and 31 is the resistance. Right? So a move between 28 and 29, fine, it's okay. But we've done that. We've done that here and we've done that here. Right? So I wouldn't be surprised if we go up to 29. But what is going to be the major coup is, can we break through 30 and then can we break through 31? If we even just touch past 31, guys, that's a game changer for us here on this move. If we can just even touch, let me just show you here. If we can even just somehow miraculously do something like this, touch above 31, and even then if it wants to pull down, absolutely no problems, because that 31 will give us the higher high and we can continue to trend up. So that's a really important level for me right now. That's what I'm focused on. But the good stuff is CPI is trending in the right direction. Whether we believe it or not, at least they cannot have an argument to say CPI is not starting to trend in the right direction. It's coming in as expected. Now, does that mean suddenly we're going to get rate cuts? No, right? Rates will probably stay at the levels, these heightened levels for quite a while, maybe until the end of this year. But we've gone through the hard work. Right? We went through a tightening cycle. And for many of you guys who are watching this stream, who have been in crypto here for the last year or less, or some even a bit more, this is the first major tightening you would have been through. It's the fastest tightening cycle we've had in 40 plus years in the US. So it's no mean feat that you've managed to navigate through crypto during this moment. But hopefully you've taken those opportunities as well. Hopefully when Bitcoin was at those levels, at 15,000 or 19,500, hopefully you were taking those opportunities to accumulate. Because those were rough times. And I keep saying it, but I'm going to say it again. Last year, when Bitcoin was sat at 15,500, FTX collapses, Celsius collapses, Voyager collapses, Terra Luna collapsed. Everything was collapsing. Everybody hated crypto. It's a big scam. SEC was saying this and saying that. Inflation was going crazy. No signs of returning down. Right? Let me just remind you of what inflation was doing. It was up here, 9.1% in the summer of last year. right, to now printing numbers such as 4.9. We've got a 4 handle. Markets are going to like that, right? We've got a 4 handle. People were worried at one point, myself included, that 5-6% of this 9% inflation we had could have been entrenched, could have been sticky, could have been painful, and could have stayed with us for many years. So the US have done a tremendous job, particularly when you compare it to the UK. Guys, thank God you're not living here, right? 10% plus inflation. We've had that for 7, 8, 9 months, above 10%. So the US has made really good progress, and that is a good sign for risk rotating on. Let's just take a look at the dollar index as well. How is the dollar index reacting to this news? Remember, we are inversely correlated to the dollar index. We need the dollar index to move to the downside, and you're seeing a nice big ugly red candlestick for the dollar index getting rejected here on the hourly chart. So that's good news. Dollar index moved to the downside, shows that risk rotates on. Good for Bitcoin, good for the Nasdaq, good for risk on assets, and onwards we move. Okay, so another piece of data in our cap. Do watch out for some of these levels again. Like I said, there's a lot of resistance to be had here, particularly on shorter time frames. Don't expect there to be just a sudden big move all the way up to 30. There's a lot of resistance to be had. I mean, the main structures you do want to watch for. Let me just show you what these main structures are that we are following. So I'll show you this one, which is obviously the symmetrical triangle. We were breaking down from this, right? So now that we're able to bounce from this pivot point, exactly as we predicted, right, guys? When you break down from this triangle, you look to the first pivot point, we didn't hold it. We looked to the second pivot point. So far, we're managing to hold this. But in order to nullify, it needs to get beyond the apex. That's the rule of thumb I like to use. Get above this apex, which sits at 28,600. If it can, the triangle's out of the way, right? Until then, it's still a risk. We can still keep folding over here and working down towards the price target. So be very, very careful on that short-term time frame. The other chart pattern we've been monitoring is obviously the Fibonacci levels, right? Where are we getting this bounce from? You're getting this bounce just shy of the golden pocket, which is between 0.618 and 0.65. This is where we bounced from the previous time, and it's trying to bounce the same from here as well. Again, got to get above 28,006. Get to the next level, which is your 0.786 line, and hold that as support whilst you go mount your attack at 29 and 30, right? That's what we need to see. The other pattern we've been monitoring here on this channel is, of course, this downward trend, which we're trying to form a bit of a head and shoulders pattern. Remember we spoke about this, right? We're moving from the top towards the bottom. Fine, we understood that. But we also had this bit of a head and shoulders pattern forming here. Well, now what's happening is we're trying to recover above our neckline. If we can get above the neckline, that's good. But we've got to hold above it, retest, and work our way to the top of the channel. So there's a lot of work to do here, but even then, there's no need to panic in this market right now. There is literally no reason to panic. If you wanted to panic, panic when Bitcoin is at 15,500. You don't panic now when Bitcoin is sat here, holding quite smartly here at 27,700, even before the CPI reading, and now sitting close to 28,000. There's no reason to panic. Inflation is coming down. We could be getting to a pause soon. Then there'll be the plan of in the next 4-6 months, getting our first rate hike. That will create some euphoria in the market, and onwards and upwards we go. Hopefully you guys enjoyed this update for the CPI. If you did enjoy it, make sure you share it with somebody who would find this useful. Check out the links in the description to Bybit and Mexi, the two exchanges I'm currently using to trade. Let's see if there's any comments from some of you guys. Ian Medford, most people don't have the necessary chili for the space. The Ijaz mindset is the only way to not freak out and wreck yourself. Or at least it has been the case for me. Appreciate that. Really nice comments there, Ian. And look, you know, sometimes we've covered this off on this channel. Sensationalism sells, right? And it's easy to come out and say, make a video saying Bitcoin going to the moon because CPI was so great, or saying Bitcoin's going to zero because CPI was so bad. You know, but that's not what we do on this channel. We've got to be pragmatic. We've got to be sustainable. We're here for the long run. We're trying to build wealth predictably and sustainably. If you become, you know, you have one really good trade or one really good investment today, it's not going to change your world. But you want to be able to do it repeatedly. Right? You want to be able to navigate. You want to build the muscles to deal with this space. You should know how to deal with CPI. You should know how to deal with labor markets. You should know how to deal with FUD. You should know how to deal with upgrades to protocols or hacks or scams. All these things repeat themselves in the crypto space. So if you can learn how to deal with them, you're building a machine that can profit from that. Right? Hopefully you guys enjoyed. Smash the likes. Don't forget to subscribe. As always, check out the links in the description. And I'll see you in the next one.